Today, Bitcoin holds its ground above $112,000, while Ether drops to $4,500. And Pantera Capital's Paul Veradittakit breaks down his new report detailing this year's rise in venture capital funding for crypto. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Digital currencies are mixed this morning, with Bitcoin in the green by noon Eastern. The cryptocurrency hovered around $112,000. Meanwhile, Ether fell more than 3% this morning and crossed below $4,600. And XRP is also in the red, falling more than 1% and slipping below $3. All right, jumping to our main story, Pantera Capital out with a new report breaking down the state of venture capital funding in crypto this year. The report found VC funding for crypto projects jumped by more than 54% compared to last year, driven by regulatory tailwinds and major companies doubling down on digital assets. Crypto World's Mackenzie Sigalos talked to managing partner Paul Veradittakit about the report and what the trend means for the industry.
So this latest report on crypto venture capital trends finds that fundraising for startups is rising, up to $16 billion from $10 billion last year. So let's start right there. Where is this money going? Which kinds of projects are raking in the most cash? Or is this just a broad return into the crypto space in general?
Thank you so much for having me, Mackenzie. I'm excited to be here again. I'm a managing partner at Pantera Capital. I've been doing this for 11 years. We've hit on 22 unicorns I've been a part of and led 17 of them. So I'm extremely excited about where this industry is going right now. This is the best time for an entrepreneur and an investor in this space. And really the reasons why we're seeing some record-breaking numbers in the first part of this year is because of the Trump administration. The Trump administration is really leading the charge to make sure that U.S. is the crypto capital of the world. And, with the regulatory clarity around the Genius Act and also what's going on with the Clarity Act, bringing sort of fundamentals to tokens, we're seeing a lot of institutional interest in crypto right now, starting off with, the IPOs that are coming through, Circle IPO, and of course, like Bullish and Figure and BitGo and others. And then, of course, these digital asset treasury companies really bringing a lot of institutional interest into single assets like Ethereum, Bitcoin, and Sol. But really, the first part of this year, 16 billion. I mean, we've already eclipsed last year's number, and we're going to basically, by the end of this year, I believe, eclipse the total of the last 2 years combined. And the reason for that is that, like, we're starting to see a lot of capital wanting to invest into infrastructure, building on top of crypto. So it all starts with like custody, trading, and then it goes into spaces like artificial intelligence and payments. With the Genius Act bringing stablecoins into a more sort of like a regulatory compliant way, we're starting to see a lot of companies building, B2B and C2C applications, allowing folks to use the blockchain for faster, cheaper, and more transparent payments. So really, artificial intelligence and payments are really sort of driving a lot of the growth. But we're going to see a lot of growth around decentralized finance and other areas too. Again, like record-breaking numbers so far this year in terms of funding. We're seeing over 100 mergers and acquisitions happening within this space. And we think this trend is going to even accelerate throughout the rest of this year.
Now, one of the things that you say in this report is that this cycle could be different than past ones, where the usual ups and downs of the markets may change. Talk about why you expect to see a shift in that pattern or more stability in general.
Yeah, I think it's a combination of the fact that we are seeing a lot more institutional capital coming into this space. And this institutional capital is a lot more sticky than retail capital in the past. Again, the record-breaking numbers in the past have been in 2021 and 2022, and most of that capital was retail capital. Especially now that we're seeing more and more ETFs come to market, digital asset treasury companies, companies that are going public. The institutional capital that's coming in is coming in a very large way, and it's actually waiting to come in even more. And so we believe that capital is going to come. They're long-term holders. They're sticky. And then on top of that, I think the other thing that's going to drive more capital coming into the space is around tokens. With the Clarity Act, we do believe that there are going to be a huge influx of companies that will launch tokens later this year, companies based in the United States. And these token projects will actually have fundamentals. And there's a lot more tools and data for institutional investors to evaluate these token projects. So we're not going to see a lot of like really, really, design tokens that really kind of bring a very high price and sort of like low float. We're going to see a lot of tokens really have a lot of liquidity out there, and thus they really do have to show that they are hitting product market fit, that they do have fundamentals for these tokens to sustain value. But we do believe that we're not going to see a flash in the pan around token models going forward. We're going to see really companies that find product market fit, that are resilient, and that are institutional grade.
And one of the things that we discussed extensively on this show after the last crypto winter was this pivot of VC interest away from Web3 and crypto and into AI a couple of years ago. And you were getting at this a little bit earlier, but where does that stand now? Is crypto still competing with dollars going to AI startups? Is it wrong to think of it as a zero-sum game that you have winners and losers here?
We believe that there has been a tremendous amount, and rightfully so, going into artificial intelligence, and maybe it's a bit, overbought right now. We believe that there is a lot more of an edge to be investing into crypto right now, where there's not as many folks yet investing into crypto. The crypto funds are, looking at the 16 billion. I mean, I would say the trend has been not as many deals as before, but larger deals, more conviction deals, and the crypto investors that are investing are sort of more established. But the traditional VCs haven't really come back in yet. Growth investors haven't really come back in yet. And so here's an opportunity to be investing into an underlying technology that not only will help disrupt artificial intelligence, as we have seen, open source models have been extremely powerful. DeepSeek has been extremely powerful to be able to make headways against open AI through being open source. And so we do believe that open source data, open source modeling, and agents that can more accelerate the adoption of AI and the execution of AI, really just through tokenization, is going to be huge. And so crypto is going to be disrupting AI. Crypto is going to be disrupting finance. Crypto is going to be disrupting real estate and so many other industries. And so this is the best time to be investing into crypto.
Let's very specifically talk about what kind of disruption you're referring to when you talk about crypto disrupting AI.
Yeah.
I'd love to hear more about that. But then also, is this a play at decentralized LLMs where people are really concerned about privacy?
Yeah, so the beauty of crypto disrupting AI is, number one, you can really incentivize folks to contribute more data, diversified data, better data into these models. And then you can even incentivize folks to help curate the data behind these models. And then you can even create ways for folks to contribute models and build on top of other models. And there's been less of incentive to do so before, because there's no privacy, there's no attribution to who's contributing what to these different models. But you can have both of those happen on a blockchain. You can have the privacy, you can have the accountability, the traceability, and then be able to hopefully, through open source, have better models. And then from there, it's hard for these models or these AI to have its own, or these agents to have their own bank accounts. But, they can easily work with a crypto wallet and be able to interact with all of these on-chain assets. And so, right now, we're seeing $280 billion worth of stablecoins or tokenized USD on chain. And, on top of the, tokenized USD, we see tokenized treasuries, we see tokenized mortgages. We're going to see a lot of things being tokenized. And then imagine an AI agent being able to interact with all of these tokenized assets with a sort of a self-owned bank account that they can interact with in terms of its own wallet, crypto wallet. It really brings the possibility of these agents being able to transact 5 to 10 times, like in volume, compared to sort of what they would do traditionally through like the banking system.
Shifting gears, how does the rise of crypto IPOs play into this return of VC money into crypto? One of the big things for a long time was investment firms didn't really see an off-ramp for their investment because these companies weren't going public. Many of them were trying to find profitability. So now it seems like the floodgates are open on Wall Street, right?
The floodgates are open. I mean, Pantera has invested into most of the companies that are going to go public within the next 2 months. BitGo, Gemini, Circle was one of our early stage investments. And we actually just held an IPO workshop for our portfolio companies where we're going to see 10 to 20 more probably in the upcoming future going public. And it's an exciting time. That means that it's going to open up the floodgates for traditional VCs to come back, growth stage VCs to come back, institutional investors to come into this space. So, we believe that this is tremendous as more institutional and VC folks get exposure through crypto in these pre-IPO offerings. Once they have a little bit of skin in the game, they're going to be more incentivized to get deeper into the space. And I think that capital will flow more to the early stage companies. And so, we're starting to see a lot more of those folks starting to look back at Series A, Series B rounds, and maybe even seed rounds. So this is going to be tremendously huge for the industry.
All right, that's all for Crypto World today. We're back again tomorrow, and we'll see you then.